If you look back at the last 3 to 6 months, there have been many uncertainties around the economy and the markets. These uncertainties were due to high commodity prices, the trajectory of inflation, the liquidity normalisation policies of the central banks, and finally the rate action from the central banks, especially the Fed and the RBI. But recently, the commodity prices have softened and even Brent has moved down. Global commodity index is down by almost 23% from the peak. And this offers some hope based on numbers that inflation would also soon most likely peak out. This would be beneficial for commodity consumers, that is, manufacturers. If inflation peaks out, then central bank action would also moderate gradually, and the fears of rapidly rising rates would also be contained to a large extent. The aggressive rate action by Fed has been of benefit to the global economy in two ways. One, it will help smoothen the price level in the US itself, and two, it has helped the US dollar to be strong against other currency majors. Strong dollar almost always pulls down commodity prices, and this will keep commodity prices under check, and as far as oil is concerned, the same trend would be prevailing, except for any changes that may happen in the geopolitical terrain. While there is a case for a lot of improvements in the economy and markets from all these favorable developments, what should help a discerning investor is the fact that the real GDP growth for India is expected to be in the range of 6 to 6.5% in the current year, compared to China, which is slated to grow at less than 5%, and the US close to 2.5%. This puts the Indian economy in the lead, with global growth at just 3.5%. What spurs earnings growth is GDP growth. The index valuations too look more reasonable, although it's a shade higher than the 15-year average of 16 times. Therefore, this is potentially a time for investing selectively in well-managed funds in a staggered manner. The China Plus One strategy, the benefits of PLI, and even a weaker rupee to some extent would help the domestic manufacturing sector to thrive compared to any other sector.